Welcome to TalkTickers, the podcast where we break down the earnings calls that matter,
giving you the insights you need fast.
Today we're diving into Xcel Brands, that's ticker XELB, and their Q2 2025 earnings call from August.
And this one's interesting. It's not just about the numbers. There's a major strategic pivot happening, a whole new business model, really.
Right, a big shift. Okay, so let's start with a quick snapshot of the Q2 results. It was a bit of a mixed picture, you could say.
Definitely a mixed bag, which led to, well, a cautious initial reaction from the market.
So on the non-GAAP EPS, that's earnings per share adjusted for certain items, they reported a loss of 37 cents.
Which actually was better than expected. The consensus was looking for a loss of 250 cents. So a beat by Ziller 13 cents there.
Okay, a positive sign on that front. But then you look at the GAAP EPS, the official number, according to accounting principles.
Yeah, there was a wider loss, 25 per share.
And revenue, that's where you really see the impact of their changes.
Big time. Total revenues came in at $1.3 million.
Which is down, what, 55% compared to last year?
A substantial drop. Yeah, 55% year over year. And it missed the analyst consensus, too, which was around $1.84 million. So a miss of about $0.54 million.
And adjusted EBITDA.
That landed at a loss of $0.30 for the quarter.
Okay. And there is also that non-cash charge related to debt.
That's right, a $1.9 million loss recognized on the early extinguishment of debt, tied to the refinancing they did back in April.
Right. So that hit the reported net loss, the GAAP number, but it was excluded from that non-GAAP EPS figure we mentioned earlier.
Exactly. Important distinction.
So summing up the results, despite that non-GAAP beat, the market seemed, initially at least, a bit wary. Focused on the revenue decline, maybe?
I think so. Understandably cautious. Though, interestingly, the share price did see a bit of a rebound the next day. Maybe folks started digging into the strategy a bit more.
Okay, let's do that digging now, the deep dive. This strategic transformation, they're calling it a working capital light model.
That's the term they're using. The core idea is moving away from holding lots of inventory, which ties up cash, and focusing more on licensing deals and building brands around creators and influencers.
Less inventory risk, more focus on IP and royalties.
Precisely. And they've made some big financial moves to support this. You mentioned the April refinancing. That involved a strategic alliance with United Trademark Group, UTG.
And a key debt amendment came with that, didn't it?
Absolutely crucial. The interest on their term Loan B is now payable in kind, or PIK.
PIK, meaning they don't pay cash interest right now. It just gets added to the loan balance.
Exactly. Until March 31st, 2027. So for the next couple of years, that frees up significant cash flow. Huge for funding the new strategy.
Yes, quite a runway. And then after the quarter ended in August, they did an equity offering.
They did. A $2.6 million public equity offering, and alongside that, a private placement led by management.
Some more cash coming in. Was this just shoring things up or really fueling the new plan?
It seems like fueling the plan. Management emphasized these moves significantly strengthened the balance sheet and provided liquidity specifically for launching these new brands.
Okay, so they're financing the transformation. And they're cutting costs, too.
Aggressively. They've got the operating expense run rate down to less than $10 million a year now. Very lean.
Impressive. Now, back to that big revenue drop, 55%. You mentioned it was tied to a divestiture.
Yes, primarily. They sold the Lori Goldstein brand at the end of Q2 last year, 2024. So that wasn't in this year's Q2 numbers, obviously.
Right. So the year-over-year comparison is skewed. How much did that brand contribute last year?
Quite a bit. Roughly $1.5 million in revenue in Q2 2024, and over $500,000 in adjusted EBITDA.
Okay, so if you adjust for that sale, how did the remaining brands do?
That's the key point. If you strip out Lori Goldstein's contribution from last year, the remaining brands actually showed a $250,000 improvement in adjusted EBITDA year over year. That's up 45%.
Wow, okay. So underneath that headline revenue drop, the core retained business actually showed improved profitability. That's a very different story.
It completely reframes it, doesn't it? It shows the strategic shift is having an impact. Even if the top line looks messy, because of the divestiture.
Right. So the core of this new strategy is these creator-led brands, leveraging social media followings.
Exactly. And the scale they're reaching is pretty dramatic.
Yeah.
They started the year with about 5 million followers across their portfolio. And now they're at 43 million.
43 million. That's a huge jump.
Massive jump. And they have a long-term goal of hitting 100 million followers.
Yeah.
They see that reach as a core asset.
It basically gives them a built-in audience, reduces marketing costs, maybe.
That's the idea. De-risks, launches, builds community. And they're moving fast on specific brands.
Yeah.
Cesar Millan, the dog trainer.
Trust, respect, love.
Right.
Pet accessories and electronics.
Yep. Launching for holiday 2025. So coming up soon.
And food brands, too.
Yes. Gemma Safford's Gemma Made for kitchen and food, and Jenny Martinez's Mesa Mia, also focused on food products.
Also launching for the holidays.
Yes. Interestingly, they're launching the food components first for both of those brands because they can source them domestically. Faster to market for the holiday season.
Smart. Any others in the pipeline?
Coco Rucha is planned for the beauty category, tied into their Orme platform initiative, and they highlighted existing brands too.
Like Sea Wonder and Christy Brinkley.
Yeah, called out as the fastest growing brands at HSN. And Judith Rip's sales on JTV were up over 65% from Q1. So strength in parts of the existing portfolio too.
And the Longaberger brand, the basket company.
Longaber, yes. They're launching that on QVC this fall and actively looking for an influencer partner to tie into the new strategy.
Okay, lots of activity. What about guidance? Did management give any specific targets for the rest of the year?
No hard revenue or EPS numbers, which isn't surprising given the transition, but they did set a clear target. Approaching break even on a monthly adjusted EBITDA basis by the end of 2025.
Okay, a clear profitability milestone to watch for by year end. But they sounded a bit cautious about Q3 and Q4.
They did, pointing to potential tariff impacts on their QVC and HSN channels. Also some ongoing transitions with licensees, specifically mentioning G3, who handles their HOL brand.
Any update on that HOL situation?
Yeah, they noted G3 has a new president who is making significant investments in the brand. Specific forecasts are still pending, but Xcel feels things are getting back on track there. So cautiously optimistic, maybe.
Got it. And just quickly, the Orme initiative, any updates there?
Just that they're working on improving the user experience, growing the user and influencer base. And a capital raise for Orme is apparently pending. Something else to watch.
Okay, so let's pull back and look at the investor context. What are the main challenges facing Xcel right now?
Well, obviously, that big year-over-year revenue decline, even adjusted, is something they need to reverse with new growth. The creator commerce space is super competitive, kind of the Wild West.
Execution risk too, right? Getting these new brands launched on time, getting retail placement.
Absolutely. And optically, they're lapping those gains from the divestiture last year. Plus, they have that PIK debt adding to the balance sheet, even if it's non-cash for now.
Okay, challenges acknowledged. What about potential catalysts? What could drive the stock or change perception in the next, say, 6 to 12 months?
Several things. Seeing formal product launch timelines and getting those first retail or TV placements for Cesar Millan, Gemma Made, Mesa Mia, that would be huge validation.
Getting it real.
Exactly. Any new licensing deals will also be a positive sign for the model. Updates on hitting that adjusted EBITDA break-even target.
That's a big one.
Definitely. And then the actual holiday sales performance. How well do these new brands sell through during the crucial Q4?
The first real test in the market.
For sure. Looking into early 2026, maybe seeing the Cesar Millan line at the Global Pet Expo, signing more creators would be another catalyst.
And any more news on the financing front, amendments, or maybe even paying down some debt early if things go well?
Right. All things to watch. So wrapping up the context, the key for listeners is understanding this pivot. It's about de-risking working capital, avoiding inventory pitfalls, and betting big on social reach and licensing.
And maybe the initial market reaction got caught up in the backward-looking revenue number, not the forward-looking strategy.
Quite possibly. It's a bet on a very different future for Xcel.
Okay, which brings us nicely to our This Is Not Financial Advice segment. Just exploring ideas here, purely conceptual. Always do your own homework. Talk to a pro.
Standard disclaimer applies. But we like to throw out an outrageous but plausible trade idea.
So what's the idea inspired by Xcel's story?
Okay, how about this? Go long XELB. Paired with a short position in a traditional, maybe department store or apparel retailer, one that's heavy on inventory and hasn't really cracked the code on influencer marketing.
Ooh, interesting. Long the disruptor, short the potentially disrupted. What's the bold thinking there?
The thesis is basically that the market is sleeping on this Xcel pivot. 43 million followers, heading towards 100 million. That's a massive direct-to-consumer channel they're building.
The influencer multiplier effect.
Exactly. You've got these high-profile launches, Cesar Millan, Gemma Stafford, Jenny Martinez, timed for the holidays. The idea is that the old Xcel, the pre-pivot Xcel, is dragging down the perception of the new Xcel.
The working capital light, social first version.
Right. And the current stock price, according to this thesis, doesn't reflect the potential future royalty streams from these brands, which could scale much faster and cheaper than traditional retail.
So the bet is that Xcel's lower overhead influencer-driven model will outperform traditional retail burdened by inventory, physical stores, and slower adaptation.
Precisely. And that PIK interest gives them the time, the runway for the strategy to work. It's a bet that over the next 12 to 18 months, this influencer-centric approach starts generating real value that the market has missed.
A bet on agility and the power of digital communities and commerce.
Definitely food for thought. Outrageous, but maybe plausible.
We'll let the listeners decide. Okay, so let's recap. Xcel Brands is undergoing a major transformation, shifting hard towards a creator-led, working capital-light licensing model.
Q2 showed a big revenue drop due to the Lori Goldstein sale, but a non-GAAP EPS beat and improving profitability in the core retained brands.
They've bolstered the balance sheet with financing and that helpful PI debt structure, cut costs aggressively, and they're aiming for monthly adjusted EBITDA break-even by year-end 2025.
The whole game now is leveraging that massive social media reach, 43 million, and counting, to launch new brands and drive future growth.
And remember, everything we've discussed today is for informational purposes only. It is absolutely not financial advice.
Please consult with a qualified professional before making any investment decisions.
So as Xcel pushes towards that ambitious 100 million follower goal, the big question really hangs in the air. How quickly and how effectively can they turn all that digital reach, all those eyeballs and clicks, into actual dollars? Sustainable revenue and profit that makes the wider market sit up and take notice.
That's the billion-dollar question, or maybe the 100 million follower question. We'll be watching.
Thanks for tuning into TalkTickers. Join us next time for another deep dive.